Hello guys, welcome back to ESENtaxa. Andrea Papito here, and in today's video we are going to talk about 5 most requested things from our clients here in ESENtaxa. In this channel, if you're new, we talk about how to optimize your taxation if you move in a specific country. We talk mostly about Italy, and we also cover Belgium as a jurisdiction. In this country, we help you to understand the taxation, how the Italian tax system works, and how you can optimize and squeeze the tax as much as possible. Since the country has quite complex and multiple tax regimes, we help you to exploit the correct one for your specific situation. In this specific video, I just want to gather the 5 most common questions that we are getting from our clients in our consultancy services. By the way, if you're looking for a consultancy services on this matter, on this subject, look at the description below the video. You will have our calendar link to book 20 minutes call or 1 hour call, or we provide also tax simulation to understand exactly your situation if you were an Italian tax resident already, and you can understand if this country and if the relocation to this country tax-wise makes sense or not. And also you will find our email contact info@esentaxa.com, in which you can describe specific situation. You can ask us for specific consultation on specific subject or topics. Now, here, as I said before, I gathered 5 most common questions that we get from our clients. And let's start from the first. Let's start from the beginning. The first one is the following. Italy tax you, if you move to Italy, no, and you bring with you all your wealth, all your money, your bank accounts, everything regarding your status, does tax you with a sort of remittance tax? Or in the other way around, vice versa, if you're leaving the country, if you're living already in Italy, you want to move in another country, does Italy tax you with a sort of exit tax, where some other country in the world apply this kind of taxes, like remittance tax or exit tax? Well, the answer is no, absolutely not. Italy doesn't have this in the Italian tax system. There is not a concept of exit tax or remittance tax or exit tax. Nothing of these things exist in Italy. What does it mean? It means that if you become Italian tax resident because you pass more than 6 months in Italy, because you live there, because you create ties, economical or relationship for more than 6 months in the country, or simply because you register your name in the anagraphical community in the municipality of your choice for more than 6 months, so these are all if one of those things that I just said are verified, you are Italian tax resident, and then which means that you will be taxed worldwide on your worldwide incomes, okay? Which means that if you have money in a certain bank account and you want to transfer those money in Italy, it's fine, it's perfectly fine. In some countries instead there is a sort of remittance tax or exit tax. If you move a bunch of money from a country to another, from a bank account to another bank account, you have to pay some taxes. Well, from the Italian tax point of view, there's nothing to be worried about it, because you can, once you become Italian tax resident, you just declare that you have all these worldwide bank accounts abroad, because you have to declare your bank account that you have abroad, and then you can move your money in Italy or in another jurisdiction as long as you declare to possess those bank accounts abroad. So this is the classical cases. And also the other way around. If you live in the country, if you're not anymore Italian tax resident, you simply stop declaring taxes, you're not anymore tax resident, then all the money, all the wealth that you have accumulated will be subject to another jurisdiction, tax-wise. So will be subject to another jurisdiction, and then Italy considers you tax resident, then it starts to consider your wealth and tax your wealth or your incomes only when you become tax resident, and everything that you have accumulated up to that moment, it's fine because you were subject to another jurisdiction. Okay, so that's the reason why there is no remittance tax or no exit tax. The second point, in this channel we always talk about unwanted regime, a forfait regime, where are the tax regimes most favorable for those who are working. And basically those tax regimes applies exclusively on your professional income, okay? This is a lot of people think that, okay, I move to Italy, I apply for the unwanted regime, I have 50% discount on my taxes, or vice versa, or the other way around. I apply the forfait regime instead of the unwanted regime, I get 5% flat tax up to my 85k threshold, because there is a threshold there. But this flat tax 5% works only on the self-employed income or employee income. So it's basically the professional income, the income where you professionally working, you're paying social security at the top of it. All the rest of the passive incomes or type of incomes from interests, from dividends, any other type of incomes from Italy, from abroad, they're not subject to this tax regimes, flat taxes or tax discount. This is extremely important. So when you're looking for unwanted regime and forfait regime, they both apply on professional incomes. Okay, all the rest of the incomes, they are subject to ordinary taxation, which still have different way to calculate it. They might be subject to other flat taxes, withholding tax called as otherwise, or they might be subject to the ordinary Italian progressive taxation. Okay, so this is also important to take into account, especially when you want to understand what would be the tax burden in Italy. Because if the professional income is not the only one income that you have, then you have to make the average of what you pay on the other type of incomes and what you pay on the professional income, you see? So you have to check if then at the end of the day it's worth moving to Italy, even though you applied for the tax regime. Here there are two exceptions. Is the exception for the tax regime for high net worth individual. We're going to talk on the latest point here. And the other exception is when you're a pensioner. Then when you're a pensioner, you're not working anymore in general cases, and then there you will be subject to 7% flat tax only if you're receiving a pension from abroad. So there are another tax regime specifically designed for pensioners who wants to move to Italy, okay? But for the rest of the cases, the tax benefits applied only on the professional incomes. Third point. Now, here also I got this question quite often. When I apply for my forfait regime, unwanted regime, when I become a freelancer in Italy or self-employed in Italy, may I use foreign currencies? May I trade, sell services with foreign company? So I can use foreign currency, or can I have my bank account abroad, my business bank account abroad? I can keep using my business bank account abroad with a different currency because I want to keep my working relationship with my previous client or my previous companies? The answer is yes, you can do it, of course. There is no restrictions. You can keep using your foreign business bank account. You can open another bank account in whatever jurisdiction you want in the world. You can trade. You can sell your goods, your services with any kind of foreign currencies, even with cryptocurrencies you can do it. It's a little bit, then we just have to then convert in euro when we encode the Italian invoices in the Italian electronic tax system. In Italy exists the invoicing system. You don't issue any more paper invoices, but we, as an accounting firm, because we also are an accounting firm, we encode your invoices. So you issue invoices, we fetch your data, and we encode all the data in our Italian e-invoicing system, okay? In the electronic Italian invoice system, and that's it. And then at the moment of converting, in the moment of filling these electronic invoices, we convert the foreign currencies in the euro currency. That's it. So you can keep using the foreign currencies. You can keep, of course, a relationship with foreign clients because you are allowed to trade with foreign entities or private people. And you can also have bank account abroad. The only thing that you have to be careful about that when you're Italian tax resident, at least one bank account must be Italian. That's for a simple practical reason, because you have to pay the F24. We have to pay taxes in Italy through a F24 model. This is extremely important. I will write it here. F24 model. It's a model that can be filled and paid through the Italian banking system. So if you have an Italian bank account, it's mandatory just to pay taxes. So you can keep using your foreign bank account for business, whatever you want to do. Then you just transfer the amount of taxes you need to pay to the state. You transfer this amount of tax to your Italian bank account, and then you use your Italian bank account to pay taxes in Italy, okay? Through this F24 model system. That's it. That's how it works. So you're completely free. You can also have bank accounts in tax havens, as long as you declare them, because at the end of the day, you have to just declare what you have. That's it. And here we go straight to the fourth point, the wealth tax on assets abroad. And in Italy, there is, unfortunately, this is, let's say, it's a bad news, because so far we talked about good things, we got to talk about objective things, but now we're talking about these are the advantages of being Italian tax resident. It's true that you have a lot of tax benefit, tax discounts. You might be eligible for one of those tax discounts, but as soon as you become Italian tax resident, you have to pay a wealth tax. The Italian acronym, it's IVEF. It's a little bit IVEFE. This is the acronym, IVAFE in Italian. So this tax, it's basically a wealth tax on assets detained abroad. Assets are financial assets detained abroad, for example, portfolio that you're using for investing, brokerage account, or also bank accounts abroad. There are some exceptions. For example, if you have shares of a limited company, those are not subject to wealth tax. If you have a pension fund, those are not subject to wealth tax. So only on certain products, you're subject to a 0.2% tax on the value of this portfolio, okay? It means that every year you pay this tax on the value. So we monitor on the tax file return the value, we write the value, and you pay taxes on the value. And this is every year, regardless if you're receiving interests or dividends or capital gains from those products, from those financial assets. The interest, dividend, capital gains are taxed separately at 26% flat, but on top of it, there is the wealth tax on assets abroad. Also on cryptocurrencies, it's the same. If you have a pre-portfolio in cryptocurrencies, you have to pay these things. Keep in mind that this calculation might be extremely important to do, because when you move to Italy, as I said before in the previous point, you might want to check if there is a real tax benefit from your case. So if you have only professional income and you're applying for Forfait Regime or Forfait Regime, it's perfectly fine. But if you have also other things abroad, you have to take into account also this small tax. At the end, it's a small tax, but it's something that has to be added and see if the relocation to Italy makes sense or not. Okay? So a lot of people are not aware about this. So this is not really a question that I get from clients. It's something that I have to always remind to the clients, that there is this wealth tax when you move to Italy. And also applies for bank accounts abroad under a certain threshold, but it's really ridiculous, like 34 euro fixed amount, 34 euro per year. So it's really ridiculous. So bank accounts, let's just forget about it. But it's mostly for assets abroad, like financial assets. And there is also the same tax applied for property abroad, real estate detained abroad. But there you can tax credit with the annual tax that you already pay on those property abroad. And this would be deeply discussed in a different video. And finally, fifth point, Italy, how does it tax you? We just said before that when you become an Italian tax resident, you are taxed on your worldwide income, because Italy uses the worldwide income taxation principle, like the most of the country in the world. So you have this principle. It means that when you become Italian tax resident, you tax all your incomes regardless where they are coming from, okay? Now, there is only one exception at this rule, and when you apply the high net worth individual tax scheme, 100,000 euro, okay? So if you're not familiar with this tax regime, in ESENtaxa we have quite a lot of video about these things. Here in this video, I just want to tell you that this tax regime is just the exception, because in this regime, you become a territorial tax resident in Italy. So you become an Italian tax resident, but you will be taxed on territorial basis and not on worldwide basis, okay? So this is the only exception that you can have in Italy. In reverse, this is, of course, it's called high net worth individual tax, flat tax. It means that if you have an income higher than 1 million, 2 million euro, it makes sense to apply for this tax regime, because you're going to pay only 100,000 euro fixed tax. It's not a percentage, it's a fixed tax that replaced the worldwide income taxation, okay? So basically, the Italian state says, we renounce to tax you on worldwide basis. In exchange, you pay us only 100,000 euro. Then all your incomes from abroad will not be taxed at the ordinary Italian tax bracket system, okay? So you can earn million of euro, 2 million, 10 million, 50 million, you always pay 100K. And thanks to this system, you don't have to pay the wealth tax as well. So you don't monitor any assets abroad, all your bank accounts abroad, they must be not monitored anymore, and there is no wealth tax to pay abroad. And also your worldwide income won't be taxed in Italy. So you will become Italian tax resident under the territorial basing system, paying only 100,000 euro. And then this tax scheme, it also allows you to pay only 25,000 euro if you add another taxpayer at your dossier, your file, which might be a member of your family, okay? I hope I was clear. These were the most common questions. There are a lot of other questions, of course, but I think those are the most important ones that I want to remark in this video. If you like this kind of content, please notification bell, like button, and subscribe the channel to be always updated whenever we release this kind of video, this kind of content for free. And you will get the notification and enjoy our content on Italy and other jurisdictions such as Belgium. Thanks for watching this video and see you the next time. Bye.